Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're going to be jumping down into the world of Bitcoin, taking a look at the weekly position and what might happen here on the weekly close. We'll be taking a look at those key numbers that we want to be looking for, either the bulls pushing us up towards or the bears taking us down below. As I get into the video, if you find it useful and informative, smash that like button. I really do appreciate that. If you're new, subscribe, don't forget to tap the bell, and in doing so you will be kept up to date with all the videos that we do here at Cheeky Crypto. Now if you haven't yet joined us in Discord, check it out. Linked in the description below. It's a fantastic community talking crypto 24/7, and it's the first place that we go to notify you of everything that's going on in the crypto space. So let's jump right down into this one. It's probably going to be quite brief. There isn't terribly too much going on this weekly time frame, but we will take a look at the usual stuff. We'll have the Elliott Wave theory approach with a few additional things. We'll take a look at the smart money concepts with additional things, and then we'll take a look at those support resistance supply demand areas as well on those weekly time frames. So we'll do is we'll bring this one up into our weekly as well. And we'll start here. Okay, so we are overbought on the weekly time frame according to the stochastic RSI, but this is a stochastic RSI that is on the 𝗕𝗘𝗪𝗔𝗥𝗘 positioning, not the closed position. If I flick this to closed and close that down, we can see that we're not overbought on closed positions of candles. So what I like to do is I run both. I run 𝗕𝗪𝗔𝗥𝗘 on one chart, which basically is the average position of a candle, so the average price per candle, put into here. That gives us one stochastic RSI, and then this one over here gives us the closed position. Closed is default. I much prefer to look at the average position, so we kind of get rid of any of those kind of crazy wicks out of the scenario, and we just use the average positioning. This gives us a little bit more of a idea as to kind of where we actually are on the spectrum of overbought, oversold, and so I much prefer it myself, but each to their own and all that kind of good stuff. Let's talk about this weekly chart though. What do we see? As I've been talking about for a while now, we do find ourselves in this bear market rally to the upside. A lot of people are kind of still on that kind of hype train of thinking we're in some kind of impulsive structure upwards. I've been through that a dozen times. It's not possible for that to be the case, mainly because we do not have the structure down here on this low side that actually supports a wave one. It's not a diagonal, it's not a leading diagonal, it's not a contracting diagonal, it's not an expanding diagonal. There is no diagonal to be seen there. Ultimately, I look at this thing as very corrective to the upside, even though it doesn't really fit the WXYXZ 333 scenario either. It just looks like a string of corrections all kind of being pushed together and very manipulated to the upside. And so as a part of this bear market rally, if you will, one of the things that I've been kind of saying recently is that it does look like the biggest bull trap in Bitcoin's history. If we just pull this down here, the higher highs, the higher lows, it's going to be a tendency to the downside, right? We can see this time and time again, right? When we have higher highs and higher lows, they break down. You can see all in this bear market, we've seen these little ones here. Okay, and we can actually acknowledge a couple others. We have one right in here. We broke down from it. And if I go ahead and grab another parallel channel, you bet it, we'll run one right here as well. Okay, so although there's a bigger kind of picture right in here, we can't ignore the fact that we are still doing a very similar situation, although it's a little bit loose at the moment, it's hard to see. The other thing to kind of bear in mind is we can flip that around and we can be super bullish on the market if we had placed it over here. And I think this is where a lot of that trap scenario comes in, right? Lower lows and lower highs have a tendency to break up. We've broken up. And, well, we got to come down, in my opinion, okay? So that move is done. So I think it's actually now more important to reflect on that as a bigger move to the downside. Now, on this weekly time frame, my biggest concern, of course, is the three-wave idea of a move to the downside, taking us down. I think I had it as of just short of $5,000, so like 4,900 something, something to that effect, right? Which is crazy, crazy bearish, right? We don't think that's necessarily going to happen. I much prefer a WXYXZ structure, which would be WXYXZ. Kind of gets you into about 12.5K, and it's a nicer kind of number. But that being said, we are where we are. Where do we flip into bullish territory from this? When we pull back down and we break this high again. Okay, so when it comes to breaking structure, that's ultimately really what we're looking for, right? We're going to look for a pull to the downside. It's inevitable, so it's not like we can go straight up. We'll just pull back down. There's some fair value gaps to talk about in and around these areas. Let's just hypothetically say 20K. It's a nice round number. We pull back down, and then what we do is we come up and we break this high. Okay, after we've had a significant pullback. We can continue to break these highs right now, but it's not going to change us into bullish state until we actually have a significant pullback, then break the structure. Okay, so really what we're looking for here is we're waiting for those kind of things to occur. We're either just going to have a small pullback and it's going to be great for accumulation. You know, we've got fantastic stuff going on down in the Discord server for all of our members who will see all of those alerts going on right now. And, you know, it's great if we have that and then we can get a big bull market. Fine, fantastic. Alternatively, you know, we get a much larger pullback and we lose this low at 15,476. And in which case, you know, we are still in that bearish territory and we have the new lower low that I suspect is on the horizon. Many different reasons for that. You can check out yesterday's video. I kind of broke down why I'm bearish about 24 hours ago, so you can check that one out. Now, when we come over into our smart money concepts, I've added the Gaussian channel on here for the weekly. This Gaussian channel historically has been very good at predicting out the bull markets and the bear markets. However, there are some underlying variables that have changed. So whether that's going to have an impact on the ability for this Gaussian channel to actually be predictive or not is going to be something that we're going to confirm or deny later on. Okay, it's not something we can do right now. So what I mean by this, again, following on from yesterday's video, we have the 2015 bear market where we stayed above the 1.236 Fibonacci retracement level. We had the 2018 bear market low where again we stayed above the 1.236 Fib level, and then we have the 2022 lows, right, coming in at lower than 1.382% on those Fib levels. And that's vastly different than the two previous bear markets, right? So if everyone keeps referencing back, if I can talk, and they keep referencing back to, you know, those previous bull markets thinking that we're in a bullish market now, but we do have underpinned data that is vastly different. Many, many different data points are different now than what they were previously. And we can't just blindly ignore those. And we can't just copy bars of candlesticks and just assume we're going to be doing the same thing. Not only do we see, you know, a vast difference with the Fibonacci retracement levels, which are key to how retail actually trade. You might not like that idea, but you know, Fibonacci sequencing is there for a reason. It's important that you do more research on that if you're not familiar. But essentially, we see, you know, a significant reduction in volume in terms of inflows and outflows on Bitcoin as well. So we know that there's about 45% reduction on the amount of Bitcoin that's been going on and off exchanges versus that of 2019, where we had a similar run. So we know that that's different. We also know that we came down lower than the previous all-time high for the first time in Bitcoin's history. That's also different. And why am I talking about all these differences? Well, these differences are key because this Gaussian channel has only been predictive when we've had very similar setups. We were above the 1.236. We never crossed the low. And so we never crossed the high of the previous bullish market. So when we had that bear market pullback, we never crossed down lower than the previous all-time high. And of course, we had very significant volumes. So for this Gaussian channel to be predictive, we would have to see those same variables in place in order to be able to predict out the same results. And really what we're doing here now is something different. And this Gaussian channel has never seen this kind of variable data before. So we don't know how it's going to react. So on the face of it, it looks bullish. It looks like we're going into a bull market. But I suspect that that isn't necessarily going to give us the kind of accuracy that we want, and I suspect this is going to be a false flag that is going to get confirmed later. Now on here we can also see two fair value gaps. This one low side is 17k. These have a tendency to get filled out because of the way that they are created by nature. Now if we zoom out of this, we can see there are no other fair value gaps on this Binance chart. But if you go to Bitstamp, you can see some from the very, very early days. This is for good reason. Every time that a weekly fair value gap has appeared here since 2017, the price action has come back and filled those gaps out. Okay, sometimes it can take a very long time. Okay, so for example, there was a fair value gap, I think right here, a little minor one, and it took us until June of 2022 to fill it out, right? So December 2020, June 2022. Okay, so we know it can take a time to kind of play out, but price action comes back down and fills these gaps out. I do suspect, though, this is going to be quicker than what we saw previously, right? We had the bullish movement to the upside and we saw the fair value gaps eventually getting filled out. I suspect that this is actually going to get filled out much faster. Okay, so it would be interesting to kind of see how that plays out, but I do suspect that we are likely to fill those fair value gaps. But on a positive note, we are still in a bullish structure. Okay, we can see that we have a change of character down here. Actually, it's quite hard to see. A break of structure here, and we've never changed this characterization into a bearish state of play, not on this weekly time frame. And if we were to lose this low down here at 15,400 or whatever it was, 15,476, then that is going to confirm that we have a change of characterization for Bitcoin on a weekly time frame, and that would be very, very bearish. So we want to be a little bit cautious with that as well. But for the most part, what numbers are we looking for from a Gaussian channel point of view, right? So from the Gaussian channel point of view, if I just expand this back out, we have the high, okay? If the bull's going to rally this anywhere, they're going to be targeting out, taking this out of the Gaussian channel, in my opinion. That's going to have to be $30,648. Okay, if the bears are going to try to do anything, they're going to have to try to take it down into the fair value gap here, which would be below the midpoint on that Gaussian channel. This essentially would be $25,918. So if the bears are going to try anything, they're going to try to drag the price down to the 25,918. But we suspect that 22K is actually the fair value gap. And the lower side of this, if there's a lot of bearish activity maybe next week or so, then we might see us come back out of this Gaussian channel, which would be deemed bearish, heading down towards our fair value gap. But that could take quite some time. I'm not expecting any large movements on this weekly time frame just yet, but we are moving down on the stochastic RSI on the regular close position, and we are still kind of looking to come down quite a bit on our weekly OHLC4 stochastic RSI. So all in all, it's looking interesting. We know the numbers that we're looking for. Ultimately, I'm leaning more on the bearish side than I am the bullish side right now on this weekly time frame. It'll be interesting to kind of see how that plays out. Now, when we take a look at this from demand, supplies, resistance, support, and all those kind of good things, we can see that the previous area of demand is the area of supply right now. It's where we're getting rejected from. This is 28,881 to 31,848. So if the bulls are going to try anything, as I said, they're going to try to push this up higher. Okay, and really, on this kind of point of view, we want to be getting a close position above this area. So we want to be above 31,848 on a close. If you're able to do that, then of course you've got a bullish market here where we might be able to see a little bit further to the upside, maybe target out some of those 36K ranges, possibly. But again, we don't really have a lot of buying pressure at this area right now. So it'd be interesting to kind of see how that plays out. Ultimately, we'll probably end up having to come down more towards the 24 to 25K. This is going to line up nicely with our weekly 200 EMA and allow us to basically kind of find a nice area of previous resistance into support. So that's going to be the next kind of major support level, I think, that we've got here for Bitcoin. And before we can even go down, we're going to have to react to a lot of these different levels. So 24 to 25 is support. We can also see 20 to 21. That's a key area. And then as we kind of come down, 17 to 18 right in there, and then the low, which is obviously 15,476. So lots of different numbers there to kind of be keeping an eye on. We kind of know that if the bulls are going to try anything, they usually do it later on a Sunday, so it'll be interesting to kind of see how they do that. And the battle between the bulls and the bears, I think, rages on as time ticks by here. Let me know what your thoughts are in the comments down below. I'm going to leave this video right there. If you did find it useful and informative, smash the like button. If you're new, subscribe. Don't forget to join us down in Discord, and guys, I'll catch you all in the next one.
We are not financial advisors. None of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.